In this lesson, you're going to learn about reversal cycles. Reversal cycles are, let's call them directionless cycles, in that they're time counts which count forward in time for a probable reversal in the market, but it doesn't distinguish on whether that reversal might be a high or a low. So let's take a look at an example. This is, what do we have here? We have bonds, daily data, and we got 2 or 3 months worth of data, quite a bit of data. I've marked off various highs and lows here, and we can see that going back to this October low, about every 5 or 6 days, with a couple exceptions, bonds made a reversal of usually at least a few days. So again, these reversal cycles don't necessarily indicate on what degree that reversal is going to be, how many, after it makes a reversal, how many bars it's going to trade in the opposite direction. But it's a time to be alert for at least a change in trend. And because these are fairly short time counts, probably the change in trend would be short term. But if it happens, one of those reversal cycles, to coincide with a potential end of wave pattern or a momentum reversal, then it can be very helpful to know. Here we have bonds going back a few months, and it's daily data. And we can see that in general, every 5 or 6 days, bonds tend to make a reversal of at least a few days, with a couple exceptions. Let's just start back here. 5 days forward, that was the first advance, and then five days sideways before it began to advance again. And then the advance, it was only 3 days before it made a correction or began a correction. 6 days later, short-term low, couple days popped up. 5 days later, another low, and then a more significant advance for 6 days. 6 days from that top, another top lasting a few days. 5 days later, another significant high. The decline lasted 6 days, a little 2-day pop. The next decline was 6 days. 6 days later was a low. So once again, some of these reversals were quite significant. Some of them were just short-term, 2 or 3 days. But when they coincided with the end of a pattern or a price position, they were really helpful to pinpoint within a day or two the probable reversal and the completion of that pattern. Well, let's just add some more days on this chart. Count forward 5 days. Now, it could be a high or it could be a low at day number 5 or day number 6. So let's just add some data and see where we're at here. Well, this was day number, I'll put it below there. Hold on 1 second so we can look at it from both sides so we're not prejudiced towards it being a high or a low. There we go. There we go. So day number 5, bonds came down in 2 days and made another short-term low. So what would we want to do? Well, we would want to count forward that 5 and 6 days again. We'll do it like so, and then we're not going to be prejudiced whether it's a high or a low. We'll just have to look at the market as it goes into that day. So that 5th or 6th day, well, we can see as of that day, it's gone essentially up. And there we are. That's day number 5. Probably the 5th or 6th day is bonds that make a reversal, and it looks like potential ABC reversal, ABC correction. And let's just add another day. Next day, reversal down, closing below recent lows. So now what would we do? Well, again, 5 or 6 days from this top, we would anticipate a probable reversal lasting a few days. So let's just add that. We don't know yet whether it's going to be a high or a low, because remember, it's a reversal cycle, not a cycle for highs and lows. Well, we're probably looking at a low because it continued lower. There we go, lower. And that's the last day on the chart because that's the day I'm recording this. So as of tomorrow and the next day, in this case, that's going to be Wednesday and Thursday, is day 5 and 6. Because the market's been coming down so steadily, we would be looking for very closely a potential for bonds to make a low as of this coming Thursday or Wednesday or Thursday in the next 2 days. How significant might that low be? Well, let's just go back for a moment and take a look at the pattern of the market coming down. Looks to me like a 1, 2, it's pretty obvious. 1, 2, 3, 4, 3, A, B, C, 4. So I don't know how this is going to turn out. Here's what I know, that as of February 9th and 10th, that's day number 5 and 6 from the last high, and over the last few months, bonds have not had more than a 6-day decline without making at least a 2 or 3 day correction against that decline. And because it's potentially in the end of wave 5 target, or end of wave 5 pattern position, wouldn't that be a beautiful setup for a reversal in the next 2 days to complete a wave 5? And that would be a much higher time frame trend. So we're able to focus in on a probable reversal in this market based on the reversal cycles of the past 2 or 3 months. Fantastic piece of information to have. So this is silver daily data, and it's about 3 or 4 months worth of data also. And let's first take a look, how do I find these reversal cycles? And every market certainly doesn't have them, but if I see on a chart that they have, fairly well-defined swings of, let's just say approximately the same length, is I just mark off the highs and the obvious highs and the lows, as I've done here. Now, certainly these aren't all of the same by any means. In fact, they go from about 8 trading days up to 20 trading days. But I can see here that here's an 8, there's 9, and there's 8. And then if I look back at these others, they seem to be multiples of around 8 or 9 trading days. So I look at, this is actually kind of interesting. This was 17 days down and exactly 17 days up also. But for instance, 17 is just about a little bit more than double 8. So then I would look and see if there's a division in one of these. This looks like a good division. That's 9 days low to low and then 8 days up. How about in this section? Well, this is the obvious division of a decline for 10 days, and then it was 7 days to the next low. So it's not an even division between 8 or 9 days, but pretty close, isn't it? How about over here? Well, 20 days down. That's certainly a division. And it went just straight down into this low, and then it had the more significant correction than anything since then, which was no big deal, 2 or 3 days. But then it was exactly 8 days to the next low. So if I just look at this section, it looks to me like about every 8 or 9 trading days, there tends to be a reversal. Now, we've got couple longer, a couple shorter, but right around that 8, 9, even 10 trading days. I realize it can go 7, as low as 7 up to 10. But I would be looking around the 8th or 9th trading days, particularly because of the last few weeks. It was 8 trading days low to low, 8 trading days up, 8 down. I'd be looking around 8 or 9 trading days for the next reversal. So let's add that onto the chart. We'll just add the 8th day. Let me check off and have 8 trading days. There we go. So we'll count forward 8 trading days from the last low. And it could be a low or high. I'll just count them on both sides for a potential high or a potential low. Certainly looks like it's going to be a high. This looks like it's already 6 days up. So we're going to be particularly alert around the 8th or 9th trading day. Definitely if it's going to make a reversal around then, it's going to be around a high. So add another day on. That looks like that's the 7th day, and that's the 8th day. Oh boy, what a tremendous advance. But now we're looking at day 8, which is the last bar on the chart, and around day 9, the next bar, little reversal inside day, then a sharp decline. So right around, was that the 8th or the 9th day? It looks like right around exactly the 8th day. That's 3 8-day reversals in a row. Yep, exactly on day 8. Well, it looks like this little reversal cycle is continuing. So let's count forward again, around 8 or 9 days. That's when we'd want to be prepared for another reversal. Put that on the downside. We don't know whether it would be a low or a high yet because it's just a reversal zone. And then we'll put it on the upside. So I'm going to just clean the chart, take that off, and we'll add some more bars onto the chart. Well, it looks like definitely if there's going to be a reversal around the 8th or 9th day, it's going to be as a low. So here we have the 8th day. This is the 9th day. So we're getting near the extreme of making that reversal. And this was way too early. That was only the 6th day. We haven't had any of these that were that short. We did have one 7-day low to low. So this is day 8, day 9. So what we would know is that we're near the extreme of that reversal cycle from when usually we make a reversal. And because this, to me, it looks like a beautiful 5-wave decline, I would say we're within a day or two of completing a low. So even if we stretch this out to around the 10 trading days, I always eliminate the shortest and longest if they're outliers. So up to 10 trading days, which that's day 10th. Boy, you'd really want to be alert to any sort of reversal in the market. There's the next trading day. Let me add another bar. Well, it looks like it's made that reversal, doesn't it? Let me just mark this off. How many days was that? Needed to mark that one off. There we go. It was the 10th day down. It's when it made the reversal. So it went a day beyond the 8 or 9 trading day reversal cycle. But how helpful would this be if you know as a market is declining that it's within a day or two of making a reversal that could be fairly significant, given a lot of these reversals lasted 8 days. That's over a week and a half. And we were coming into the extreme of that time period to make that reversal. And it looks to me like 1, 2, 3, 4, 5. So we're in 5th wave going into that 8 to 9 trading day. And we stretched it in 1 day longer, 10th day, then made the low, then made a sharp reversal. So reversal cycles can be really helpful. And they're not going to be dead on. But again, if you can find if in the market, if there's a fairly narrow range of time from when the typically makes a reversal, then count forward that amount of time and be prepared. It could be a high, it could be a low. Look at the pattern, look at the momentum, and you'll find these can really be helpful to help you identify particularly situations like this, the last section of a trend or a counter trend. So for here we had day 8, pretty significant low. It's probably pretty significant 5-wave decline. Then we had day 8 in advance. Day 8, the ABC correction. And then day 8 again, looked like an impulsive advance that stopped right in day 8, 5 waves down into day 10. Really helpful information to have these reversal cycles. And the one thing we want to just caution before leaving this section is that every market doesn't have a tight range of reversal cycles. So once again, when you start marking off the highs and the lows, and if you see if there's several that are in a tight range within a bar or two, and the other sections are multiples of what is the most frequent cycle, usually you can break it down and you'll see that around half of those larger degree trends, usually somewhere about halfway, there was some kind of reaction.